Most of the time I get to read the news a lot, and when I'm reading news about PenCom, I have to brace myself when I'm about to say a surname, because it's an incredible surname. I love it so much, and I keep practicing every time. I hope I did well. This time I tried. I tried a little bit. Thank you so much, Ma, for joining us here today. So definitely we've been talking a lot about unlocking capital, patient capital, if I say so at this point, because most of the time we have very impatient capital. Capital that's just looking to come in hot, take the money out immediately. All facets of the economy is suffering, from that right now. Infrastructure, healthcare, technology, the list goes on at this point. You sit on a lot of money at this point. And, for me, I'm a risk taker. I love risk. And I deal with a lot of guys that love to take risks. But I know that will not be your thinking, at this point. So talk to me about how the role of pension funds, how that's evolving, so far as a source of capital for Nigeria. Sure, it's on. You can speak to.
So, pension fund.
Try it again.
Okay.
Yeah.
All right. Working. Thank you for that great question. And yes, you got my name correctly. That was perfect, actually. It looks like you've been practicing it before you came on stage. So the role of pension funds has evolved over the years. 22 years ago, when the Pension Reform Act was passed and implemented, we started from ground zero. And essentially what was at the top of everyone's mind then was safety. How do we transform the retirement of ordinary Nigerians so that they can retire into dignity? And that question has since matured, so I think we've kind of moved away from there, because as of today we're at 29.5 trillion. We're headed to 30 trillion very soon. And so the question then begins to change as to how then do we make impact. And what we are doing in PenCom, working together with the industry, is to see how pension funds stop being just passive allocators, but moving into active stewardship and being part of the economy or shaping the economy where pension funds assets are actually invested. And that's why last year the Pension Industry Leadership Council was inaugurated, because we want to take let me call it engagement. We want all the nation. So I would say, talking about evolving, we've evolved from last year, so we're looking at just safety and dignity. I'm not too sure if we really achieve dignity that much, but at least we're looking at it. To a place where we are now saying that there has to be impact. We need to contribute more to the economy itself. We are the largest pool of savings capital in the country, and we must have something to say as it relates to the economy and the developmental goals of the economy as well.
All right, so when you mentioned safety, the investing climate has changed a lot. And we know, when it comes to pension and PenCom, we like to play safe. A safe haven asset like gold, we've seen volatility there. Personally, I witnessed a trader lose up to $1 million trading gold. That didn't used to happen in the past. It was considered a safe haven asset. So we're at a time where assets are changing a lot. With the Iran war, we're seeing the war, but gold is still falling. Normally, with a war like that, you will see gold rise. That was the thinking, back then. So for you, how are you navigating changing asset classes at this point to make sure your allocations stay safe?
I think it's to have a balance. And sometimes this is all noise, and they are short-term noise. So gold is falling, even though I wouldn't necessarily use gold as an example, because a number of people use it as an edge against the US dollar. So you find out that the US dollar goes up, maybe gold is going down, and vice versa. But the way we look at this is we walk through this using allocations, the way we decide what kind of allocations pension funds should be investing in specific assets. And you can't run away from market volatility. They would always be there. But what is important is to be investing in asset classes that are quality, that has quality, if you understand what I'm saying. So, and I don't want to mention the name of any company or stock, so it doesn't seem like I'm promoting one in Nigeria. But I would say something like Apple, for instance. So you know Apple will always deliver. The iPhone is selling. They've been there for a long time. And if they're temporarily the stock price is going down, it might be because of some things that the stock is reacting to, but eventually it will stabilize. And we saw that with Apple. We see it with all these top stock in the US. If you look at the Max 7, they go down, then they go up, but overall they stay stable. So the reason why I'm saying that is, even with all the volatility, quality is what is important. So if you invest in those quality names, then you don't have to worry that your funds will vanish. Even we are facing some form of volatility right now with pension funds because we've increased the allocation to equities. And with that means market goes up, we enjoy the benefits. It also goes down. We shed a bit of tears, but we move on eventually because the market eventually finds its level. That's how I see it. But I think in terms of managing volatility generally, we look at spreading the risk across various asset classes. So everything is not going down at once. And we have allocations to equity, infrastructure. So it depends on how PFAs have designed their investment strategy. They have the defensive bit of it, and they also have the sort of higher risk bit of it. So I think it's a balance. I won't worry too much about volatility if it is a quality name out there.
Right. You did mention about over 20 trillion, sitting about 27 trillion or more.
29 and a half,
29
almost
and a half
30 trillion.
Almost 30 trillion.
Yeah.
Keep that number. When we look at infrastructure, in Nigeria, there's a huge gap there. And to fill that gap will take a lot of money. And, some other sectors at this point, what would it take to unlock, pension capital, to direct it to those kind of sectors?
So I'm not sure the framing is right, because the framing is always like, okay, what will it take to unlock pension capital, and assuming pension funds are not investing. I don't think that's a correct way to frame it, and the framing does matter. I think the way to look at this is, are there investable and bankable infrastructure projects, assets out there that pension funds can invest in? The truth is that the capital is there, and I believe that pension funds are ready to invest at scale. And you mentioned the infrastructure gap in the country. The truth is that all of this helps to develop the country. So the better infrastructure we have, the better development the country has. So it's in the interest of pension funds to play in this market. But I think that a number of things or conditions have not been met to allow pension funds capital to flow into infrastructure. And I did mention bankability and, investable assets out there, which frankly, I don't see too many of that. You need asset classes where the cash flow is certain, strong corporate governance, the sponsors are credible, and all the various requirements which we have listed out. But from what we've seen, it's not all the time that you have this kind of assets readily available. So I think once the assets is bankable, investable, and meet certain requirements that has been specified, pension funds will automatically invest. What we are seeing now is not that pension funds don't want to invest, but the conditions to invest have just simply not been met.
Okay, so looking at where we're coming from and where we are right now as a country with reforms so far, policy, government policy, and from the private sector side of things, have you seen any form or shred of improvement that could make some of these projects bankable?
So what I would say is this. From where I sit, I don't even see many flows in that area. As a regulator, we are even doing more than we should be doing as a regulator. I normally will tell the industry we get involved in things. I think I should just sit back. I should act like CBN, sit down and just regulate and, dictate. But my work is a lot tougher than that because we have to get involved and take part in market development. So what I would say is this. I think there's an effort to get there. And in order to get there, all parties need to work together, from the government coming out with the right public policy and even be ready to put down that stop-loss capital if need be to make some projects bankable, up to regulators, of course. And then the private sector itself has to do its own bit. The DFIs have to come on board. So I believe if everybody within that ecosystem does what they're supposed to do, then I think we should be able to have enough pipelines of infrastructure projects. But from what I'm seeing, I don't see much of them, like I've said, because if there are, they should be coming to pension funds and we should be seeing it, right? But we are not. And just to add another point, in terms of commitment to this area, if I can use that word, part of what we are also doing is we are working on an infrastructure consortium with FSD Africa. They are working with us so that the pension industry can, form that infrastructure consortium. And then there's deliberate allocation of capital into infrastructure. And even from looking at the projects that have come out of this arrangement, is that we still didn't see a whole lot of bankable projects there. But I believe if we're working together with all the necessary partners, from the government itself to the private sector, DFIs, if we all come together and work it out, I'm sure there will be a path forward. So long and short, I am not seeing much, so I can't say whether this is improving or not, but I can tell you that we are taking action to make sure that conditions improve and pension funds can deliberately invest in infrastructure.
All right, and we'll definitely try to, track as much data as we can to find, some of these bankable projects. We'll try and take some work off you, hopefully.
I'm hoping so.
Yes. So you did mention collaboration, and I'm thinking the DFIs, government, private sector, PenCom, if you're to collaborate, at this time, who do you think should take first loss?
And so let's be clear. Pension funds can never take first loss. They have the fiduciary duty to all Nigerians, including everyone or mostly everyone in this room. So we can't gamble with their funds. So I would think between the DFI and the government should work together. So government should play its part, DFI should play their part in the risking as well. And infra credit has done a good job so far. We need more infra credits in this market to do that de-risking job. And the government should come to the party as well.
Right. So looking at infrastructure in Nigeria, what would de-risking, look like for you?
I think the risking, what that will look like for me is, and there's a lot of ways this can happen. It can be through guarantees, such that we know that pension funds are safe if you put your money in there. It could be through first loss capital, where either the government, most times governments do this, or other partners that are able to, they put first loss capital, they put their capital down and they agree that, should there be losses, we're happy to absorb that first. I think the Ministry of Finance through Murphy did something like that last year. PFAs invested something on housing, and Murphy did put together some very large amount of money on the table as first loss capital, and that worked well for PFA. So if we continue to see things like that, it will motivate pension funds to invest.
Right, and looking at what's playing out so far in the global economy, at some point, we saw central bankers were getting comfortable, in 2025, coming into 2026. Everyone was talking about, cutting interest rates. We're expecting growth. Then, bam, we get hit in the face with a war at this point. How is all of that, guiding, what you do and how you operate?
So, of course, that affects the macros in itself in the country, so it will then affect what we do as pension funds. But the good thing is that the CBN has done an excellent job in terms of stabilizing the economy. I mean, exchange rate is stable, inflation relatively stable as well. And so for us, when we operate in an environment where the microeconomic is stable, it becomes predictable for us and we don't have to worry about inflation and all of that. So I believe that where we are right now, the microeconomic condition is stable for the country. I do acknowledge what is happening in the world, and you said last year people were thinking interest rates will, come down this year and all of that, but I thought the factor that people did not really consider is that you have a disruptor in the US who can just wake up and, choose to go a certain direction that then shakes the whole world. So I think we are in a place where you need to not have that plan that, this is going to happen. There has to be various scenarios that has to be planned to know what is going to happen in the future. So, of course, what is happening there, it's affecting us in Nigeria already. It has its impact on inflation. Oil prices have gone up. The pump prices have gone up. Nigerians are feeling it. That translates into inflation. And if the central bank doesn't handle this properly, we can then begin to see problems there. But with the way the Federal Central Bank has been working, they have been able to stabilize microeconomics in the country, and we want to believe that it will continue that way. I think overall credibility matters. We have credible people at the central bank who are doing the work, and we hope that will continue. And I'm hoping this will not affect us that much. I think for us, I don't want to call it a double-edged sword. I'm not sure that's the analogy, because we export oil, right? So on the export side, you're getting this surplus, but at the same time, citizens are paying a higher prices at the pump price. So I think it's how to balance it. If we have a lot of surplus coming in, how does it support the citizens? How do we then use it to balance the economy such that inflation does not begin to spike again?
Right. And talking about, inflation spiking again, definitely with rising oil prices, energy prices are high. We've even seen the likes of Botswana leading with interest rate hikes at this point, even though we see the top central bankers are, having a hold position, but with cautious, optimism going forward. And, some are even getting hawkish, at this point. But for PenCom, how do you hedge against what's playing out outside? What's the playbook there?
So number one, PenCom doesn't hedge. We release regulations and we'll put out various asset classes out there that allows PFAs to hedge if they need to hedge, and just gives them an array of products that they can invest in. And I know a lot is happening out there that can have effects on pension and funds, but that is why different pension funds have their risk management teams to handle that bit. I think for us, what we look at is overall, how do we protect the system? And we've noticed that in the past, you mentioned inflation and all of that, we've seen the effect of currency devaluation and inflation affect pension funds. So what we always do is see how we can build assets. We are currently working to see how, for instance, pension funds we're currently working with the federal government, for instance, to see if it's possible to issue a dollar-linked bond that will make pension funds take on dollar exposure while putting down Naira. And in addition to that, part of what we also did with the review of the investment regulation last year was to increase allocation to certain asset classes. And we believe if you invest in the real economy, you're sort of edging against inflation, right? Because as prices goes up, it will be like if you're investing in infrastructure, maybe it's roads, tolls also goes up as well. So I think alternative assets are a perfect edge for those kind of scenarios. And we are, again, from a policy perspective, we just create an enabling environment. So whatever I'm saying is based on what we have done in PenCom and how we are working to ensure that pension funds don't get eroded through inflation again. So if I look at infrastructure, for instance, and like I said, there are no bankable products and assets yet in the market. But before we did the review last year, for infrastructure, I think you could invest up to like 22.5% plus. But right now with the amendment to the regulation effective September, you can now do up to 37%. So we increased by over 70%. Again, we do all of this to create asset classes where PFAs can invest so that you can manage your asset properly and we don't wake up one day and, we're dealing with over concentration in a particular place. So as a regulator for us is to make sure the enabling environment is there and the asset classes are there for PFAs to invest in and to also be able to manage their risk as necessary.
So what kind of trends are you seeing so far with PFAs in 2026? And when it comes to pension contributors, what are you seeing there?
So in terms of trends for PFAs in 2026, I would say at least investment in government bonds is reducing. And, so we have high concentration there. I mean, people were saying we're at 70% at some point. But as of now, we're less than 60% in government bonds. So the trend, I would say, is that pension funds are diversifying more. I think they're looking at other alternatives. And you will see that even the investment in the capital market has also gone up as well. Because they are looking at other areas where they can, maximize returns and earn more returns for contributors on the average. So the trend I would say is largely them diversifying away from government bonds to other assets.
Right.
And in terms of the contributors, what we see is that the formal contributors we have. When you look at formal employment, rather, we have, I would say, over 90% or northwards who are compliant and contributions are coming in. And they form the bulk of the system. That, in fact, let me just say all the contributions are from the formal sector. But the informal sector is being left behind. And we believe that there's a great opportunity in there. So we plan to unlock that opportunity in the informal sector. It's kind of been difficult since the micro pension plan was implemented in 2019. Now we've revamped that and rebranded it to the personal pension fund, personal pension plan to appeal to everybody. And what we've also done to drive contribution from the informal sector is to also establish what I will call accredited pension agents. So the accredited pension agents are the ones tasked with distributions who will go to places that the PFAs cannot get to and can bring these contributors into the system. I think over the next 5 years, we think if the strategy works, and I know people will come and hold me, but over the next 5 years, if the strategy works, I mean, in 5 years, we could be looking at maybe 100 trillion in pension assets, but I'm a very optimistic person. But that is my dream. My people laugh at me when I say this. So we want to change the landscape a bit, bring new hungry people into the system because the agents are not just going to work like agents. They're going to share fees on an annuity basis with pension funds. So we are creating a new set of, how will I call it, industry. Anybody who wants to take advantage, largely fintechs, because it's easy to distribute faster with fintechs. And then they can come on board. And who knows, you might be having accredited pension agents that can potentially be as big as Stanbic IBTC pensions in future.
Incredible. Well, we'll keep looking out for that. But looking at the housing market, we have a lot of Nigerians at this point that are looking to own homes. We've had that policy, when it comes to, taking part of your contribution to actually pay down the mortgage at this point. So many plans towards, expanding the mortgage market. How would you say it's been so far with some of the contributors trying to access those funds to pay down the mortgage? What are you seeing there? What have you seen so far?
I would say that has worked perfectly for Nigerians because at least they can now draw down on their savings to access mortgages. So that has worked well for them. Last year we also did, because we noticed that sometimes there are complaints, people are saying, oh, we are unable to access, and then there's a back and forth between PenCom and the industry. Industry says it's with PenCom, PenCom says it is not us. So what we did was we just moved that whole process to the industry, which is matured enough to process it. So I think in terms of service, in terms of timing, I think that has improved significantly, and I believe that policy works well for homeowners, people who want to own homes. Who want to own homes, that they can draw down on their pensions savings to do that. And I think it's a good policy and it's working perfectly right now.
All right, so at this point, what is the plans find, bankable projects, going forward. But what are you really seeing right now, with the policies we're seeing from this government, reforms so far? Are you optimistic or cautiously optimistic? What are you seeing?
I would say I'm very optimistic with what we are seeing so far with this government. I think that, like I mentioned, in terms of housing, Murphy did something last year, and they put the first loss capital down. So I am very optimistic with what we are seeing. I also see a government that cares about the welfare of ordinary Nigerians, and given what the president and the government has done in this regard, I remain very optimistic. As you know, last year, the government cleared all outstanding pension liabilities, some of them dating almost 20 years ago, and this government is the first government that has taken that bold step to also ensure that all pension liabilities are paid, and came in at a crucial point when the system was beginning to, people were doubting the system. So that helped us to kind of, reinstate trust in the system and commitment as well that the federal government will continue to deliver on its objectives. So I think overall, I am optimistic. I mentioned the infrastructure consortium. Part of what we are doing is also opening engagement channels with government to identify these projects that are important to the public and the government and see how we can structure things. So between now and next year, I hope elections allow us to do some things, but I remain optimistic.
All right, so I like to ask this question to business leaders, regulators that come on my show most of the time. For you, looking at the Nigerian economy and where we are right now, what keeps you up at night? And what is it about this economy and the country that helps you sleep?
That sounds like jam question to me. But what keeps me up at night is essentially the the safety of the funds that we hold for Nigerians. And not just safety. And when I mean safety, it's not just preserving capital, because if you preserve capital and inflation erodes everything, the funds are not safe. So I think of safety to say, how can we ensure that we deliver for the Nigerian people to make sure that when people retire, they can actually count on their pensions, as we see in the developed world. They should be able to live on their pensions. I worry, I look at markets, and I worry that I hope these markets are functioning well and pension funds are not at risk. So I worry about a whole lot of things. Frankly, I just forget sometimes and sleep off. But it's a lot of worry because I always want a country where all parts of the market are working effectively. And I'm not sure we are there yet. There's still a whole lot we need to do, but that really gives me sleepless nights.
All right, please put your hands together for her, Director General, PenCom, Omolola Oloworaran. Thank you so much for sitting with us today.
Thank you.
Oh, fine. Oh, sorry, I almost forgot. Questions. Thank you. Forgive me. So where do we have questions now? 4. Which way? All right, have the mic. Okay.
Thank you.
That's the man in white. Your name, sir?
My name is Nicholas Okoye. I'm the founder of the Global Investment Advisory Community. Very refreshing statements from Madame. I used to work at the Nigerian Stock Exchange, so I was part of the folks that supported the pension reform back in the day when Fola Adiola Committee was set up by the president. So I went to the National Assembly to actually get the senators to pass the bill. I was one that the stock exchange sent, but that's just from a background perspective. My question is, we are promoting and the world is evolving into digital asset markets. When pension reform was passed, and from your guidelines, digital assets, especially tokens that are tied to real world assets, were not part of the lineup of assets that pension funds may invest in. You did mention that you're interested in seeing pension funds investing in infrastructure, but the structure of those investments can come as tokenized assets. So my question is that currently in the guidelines, or do we need to issue new guidelines to allow investment funds, asset managers, and folks who want to invest in securities from a pension fund standpoint, including the private pension plans that you talked about? Will digital assets and tokenized assets be part of those approvals from PenCom, for instance?
Okay, so I'm not particularly sure whether it's an investment regulation just yet, but I think it's something that we're open to. What we're doing right now is we're very proactive. So if there's a need to issue any guideline to bring that in, we will be very fast in doing that. It's no longer a time where something needs to be done and you wait years. So we respond very quickly. But I'm not sure if investing in tokenized assets is in the... Actually, I think it's there. I believe it's there because we've spoken about this a lot. So I believe it's there and it is covered. Yes. That's what I said. If it is not there, we are very proactive. I think you were distracted when I was saying that. We are very proactive in, making amendments to regulation where need be. As you know, we issued the investment regulation last year in September. By February, we already issued an addendum that allowed people to invest more in the equities market. So I'm saying if there's a need to amend, we will do that very quickly.
All right. Thank you so much. We have another question there, but very quickly before we go to her, what do you think about Bitcoin? How do you see Bitcoin? Do you ever think about it?
I don't think about it at all. I think Bitcoin is not a store of value. I think it's valueless. But the US has a way of making money out of thin hair. So frankly, I don't rate Bitcoin. But if you want to trade in it to make money, by all means, go ahead.
Somebody else called it rat poison at some point. All right.
Okay, Dr. Makido, President of Council for National Institute of Credit Administration. Well done, DG, for all you're doing. Can we give it for her beauty and brains combined? Thank you. I love the comment you made saying that pensioners should be able to live on what they earn. And so my question will be, how will the commission work on that so that we can assess more? I recently retired, and I can tell you that what I get as my pension would only pay my driver. And I'm not able to get more. So I think it's something you want to look at. How can you allow people access a bit more from their pension? Thank you.
Okay. And this is a joke. I just don't think when they were designing it, they thought you were going to pay your driver, Maybe if you weren't paying your driver, you'll be fine. But forgive me for that. So what we are trying to do is to make sure that Nigerians continue to get more when they retire and, can maintain their lifestyle when they retire. But as you know, contributions or pensions rather is a function of what you contribute. And if the contribution is small, then the pension becomes small. And what I will add to that again is, last year we introduced the Pension Boost 1.0. I don't know if that affected you and your payout increased, but that significantly increased payout by over 40%. It's the first time that payout has gone up that much. So what we continue to do is encourage or provide the enabling environment for pension funds to be able to invest and take the right kind of risk that can generate higher returns. Once that happens, we do have a formula we use to see whether we can increase payout to retirees or not. Like I said, Pension Boost 1.0 was last year, meaning we were able to increase it. We are hoping that we continue to invest the right way and continue to put more money in the hands of retirees like yourself.
All right.
Thank you very much, DG. Really appreciate your response. I'm Mrs. Eva Akinwuton. I also recently retired from the bank. And now this 40% increment you just talked about, for some of us who retired before that, can we benefit from this incremental payouts? Thank you. Like if you retired a year or a few months before this increment. Thank you.
I don't know why Madam Eva is looking for more money. Frankly, I don't know. So if you had retired by the time the pension boost was done last year, then you will get more funds. But if you retired after that pension boost, I think it happened in June 2025 last year. But if your retirement was after then we have already factored it into your new payout. So you will just see, you are receiving more, but you wouldn't know because, you just started receiving your pensions. And so that's what I would say. But good to see you again in the crowd.
Okay, my name is Ayodeji Bankole Olushino. Well done for the work you're doing. My question is around the new personal pension plan, and then you also just talked about pension agents. And you said you were going to focus essentially distribution with fintechs. And I was thinking that is there an opportunity to also work across industry, opportunities say for microinsurance companies or those kind of other aggregators that may have deep roots. So how are you working across industry if there's an opportunity for that?
Pardon me, I said fintechs mainly, but we are open to anyone that can take pensions to Nigerians wherever they are, whether it's insurance, whether it's telcos, anybody at all that can get to Nigerians that has the right technology architecture. We'll license you. We want to license as many as possible so that they can reach ordinary Nigerians.
All right. Do we have any more? Or we're done? Okay, fantastic. Thank you so much. Please put your hands together for her for helping us answer these critical questions.
Very engaging conversation. Thank you to